Today we're gathered here to launch a major piece of work by DTZ on the future of the financial workplace. This is a report that looks into the way the financial sector works and their workplace exists within the real estate industry. We interviewed over 100 people in 47 banks across the world. We've created 7 predictions which have really looked to define the way we think the banks will be in the next 10 to 15 years.
Retail banking in some instances is almost a decade behind. It needs to act like a retail shop window now to entice customers and entice workforce employees, because as we go into 2020, 50% of the workforce is going to be millennial kind of children who are more needy and demand technology and demand their own technology. So banks need to adopt to change that, and that's their working environments and essentially the customer environment.
It's not as if banks don't need property, physical property. What they need is a changing platform, because the demands on them by their clients, by their customers, by their stakeholders is changing all of the time. The primary cities in the global banking markets, there's not a choice. You have to be there, and you will be there for a very long time. How you then organise the bank in retail terms, in back office terms, and support is evolving more quickly.
A quick thank you to what we've referred to as the collaborators, those that took part in the report, of which there are 47 banks, of which many of you are in this room today, so thank you for that. Cost pressure has been a major issue for the last 6 years, but what we found from interviewing the banks is cost pressure in the future will be a major issue even in the good times. We have found that the industry has become so regulated that perhaps it's become an inhibitor to growth, to collaboration, to change, to agility.
Banks cluster because they're confident about resource. They can plan for a long term in the future and be safe in the knowledge that they're in a location where they can recruit the resource required to undertake their work and move their business forward.
I think we're at a perfect storm. If you look today, most people can understand that you don't need a fixed piece of technology. You can either carry it or share it. And connectivity, as we know, is becoming ubiquitous, and much of the data and processing and software is heading to the cloud.
What we're seeing now is what the advertising agencies did, the creative agencies did with these hub breakout pool rooms, gaming, all this kind of connectivity within technology, within the American environment. But now we're also seeing a lot of flexi working.
So our biggest branch is now our mobile apps by far, because that's where the growing economy and requirements are.
The research we found the most persuasive, which is in the report, was from Oxford University, which predicts that 47% of jobs across all sectors will get automated over the next 2 decades.
It's good to keep costs low, it's good to be competitive, but again, I go back to the top of this slide. You'll pay a high price for your rent to get access to talent.
One of the big issues for banks coming forwards is recruiting and retaining really good talent. And while that's seen as a banking industry issue, we found that 30 to 50% of all employees in banks are technology people. So banks are now becoming technology companies in their own right. And to attract the next generation of technology talent, they need to change.
Within the opportunity to increase the revenues, if the times are hard, then there's only one other item that you can go for, and that is cost. So cost is in terms of property from the location that we operate from, or how well we use our space.